Welcome to today's episode of More Influence and Impact, where we are going to dive into the world of financial literacy. And when I look at the stats and the listenership of my show, some of my most popular episodes include the one that I had about finances. And it's a hot topic right now with everything going on in the world. And so I'm excited to have a guest to share some insights and ways that you can think about finances in a different light, especially if you're a creative person. And so we are going to get into some secrets behind pricing, recession planning / downturn economy, how you can look at your money differently. And I'm sure all sorts of other amazing wisdom nuggets are going to come up in our conversation. So I'm bringing up Jacinthe. Hi, Jacinthe.
Hi, Celia. How are you?
I'm well, thanks. Excited to have you on today.
Too shabby. Ooh. Thanks for asking. Siri thought I was talking to her.
Siri, yeah. Hi, Siri. Yes, and you're
Yes, I'm
sitting
doing great.
good. Yeah, with all of your beautiful plants for
Yeah.
everyone that's on the podcast listening on the audio. She has a beautiful backdrop with lots of beautiful plants behind her. I love plants. I'm a plant parent myself, so
Yeah, can't have too many of them.
never. So Jacinthe, she is a Canada-based fractional CFO and financial literacy advocate, and she has a decade of experience as an interior designer turned serial business owner, and she now helps creative brain agency owners increase financial literacy and bring in sustainability to their businesses. And she specializes in pricing, profitability, cash flow management, and empowering clients to scale themselves out of the day-to-day operations. Mm-hmm. So real heavy financial side, but also operational side to your business as well.
Yeah, a little bit.
Yeah. So how did you go from interior designer to CFO? I always love these stories because I have, I came from music into sales consulting. So there's always that origin story that's like really unique. So tell us yours.
Yeah, and looking back is always 2020, right?
Yeah.
Yeah, if you had told me when I was 18, just freshly turned 18 and graduating high school, going into interior design, that one day I'd be working in like accounting and finance, I'd be like, what are you talking about? So yeah, I went to school for interior design, interior architecture when I was freshly turned 18 and, did that university. And I got laid off in the 2008 recession, only about 2.5 years into working in that career. And it was what took, the first left turn into entrepreneurship. And I started a prepared meal delivery service before they were popular. Like there was no HelloFresh or Chef's Plate or whatever, all the different ones. And I failed at that, but what it lit was the entrepreneurial fire. And so since then, I've tried many a startup idea. Cooking went from cooking for people to teaching them how to cook to then using cooking lessons or dinner parties as a facilitation tool. So that was over many years of exploration of business ideas and how I could bring food and gathering people together. And I also along the way worked at a couple startups as an employee. And so saw, the chaos and the mess and the fun that working at startups is. And it wasn't until I was working at a startup, a leadership development startup, that I was introduced to a personal budgeting app by a friend of mine that really started my path to personal financial literacy. Because sure, my career has looked all great and all, like even now to 6 years ago when I co-founded a right place at the right time to co-found a management accounting company. And that's, how I became a contract CFO. But through this whole journey, like I started my first businesses in major credit card debt. I couldn't pay my rent twice in the course of 6 months in the first few years of entrepreneurship because I just didn't know how to manage my personal money, let alone business money. And so underlying what looks like a really fun, like, oh my gosh, I've done so many things and worked at startups and started businesses and, done all this stuff. There was always this really stressful undercurrent of not understanding how money worked and how to, like understand profitability and cash flow in a business to make a business go, like get beyond startup phase and grow and get to $1 million and, do those things. So yeah, it's been a long and winding journey to
Mhm.
get here.
Yes. So with what what you learned with businesses and accounting and financials and like what you were just talking about, scaling to multi-millions, like is that something that you learned in your training process? Did you learn it as you were working with clients? Like how has that journey evolved for you? Because it sounds like it's helping businesses, but it's also been your personal journey to like really master money in your own business.
Totally. So yeah, like that personal financial app was what really like got me interested in money, and like through with one of my best friends becoming my money buddy, like getting through money trauma, and
Yeah.
the shame and embarrassment of not understanding money. And so that is what helped me get into budgeting. And then I started like, yeah, this leadership development company I was working at, I built a six-figure program budget and was like, this is really expensive. Like, is tuition covering this? I don't know. Like, because that wasn't part of my job.
Uh-huh.
And that kind of lit even more of this fire of loving budgets and understanding the financial side. And because I'd been an entrepreneur and run businesses before, I was like, well, now I understand how to build a budget and sure use an Excel sheet, but like in this business, I'm not seeing the whole picture, and I want to see the whole picture because I'm an
Mhm.
entrepreneur and love businesses, right? So I got laid off from that business because, of course, this, startup couldn't pay for everything,
Mhm.
which is totally normal in startup land. And I just happened to be at the right place at the right time where my now co-founders of this management accounting company had just launched a cloud bookkeeping cohort to do two things. One, teach entrepreneurs how to do their own books, or two, teach people who wanted a flexible side hustle to become cloud bookkeepers. And I was the former and quickly became the latter.
Okay.
And so I started with learning how to do bookkeeping really on cloud software like QuickBooks Online and Xero. And then once I'd kind of mastered that, and there's always a cleanup job. And then once cleanup is done for bookkeeping, it gets into regular monthly ongoing bookkeeping, which I just found super boring. So I was like, what else can I learn? So then I was like, I'm going to be the technology person. So I learned all the cloud software and how to put it all together. And then once that was done, we co-founded Tandem Innovation Group. And so alongside my CPA and CFO partners, we built that firm from, nothing to seven figures. And so it was kind of basically like a working MBA, working MBA, kind of accounting school. I'm not a CPA, but I saw in practice like what you do to go in and not only deal with the bookkeeping, because bookkeeping is central to everything when you actually want to
Mhm.
leverage the numbers to grow to not just high six figures and then seven figures. Like you
Mhm.
need to understand what's going on in order to grow. And so it was bookkeeping systems, getting cash flow management in place, then understanding forecasting, and not just forecasting that's like finger in the wind, we think this is going to happen, but
Mhm.
how do you actually use those to monitor cash flow and profitability? So I learned it through a lot of shadowing, a lot of understanding from the bookkeeping up.
Mhm.
And then as we grew that business, we had our own forecasts and budgets and started hiring and doing all those things. And through the course of all this as well, I started working with clients, initially from a bookkeeping perspective. And then as I was learning things and us growing our firm, then it was like, great, I can start bringing this to the clients and going like, hey, beyond just your bookkeeping, like let's get a forecast in place. Let's monitor profitability. Is your pricing right? Because like profitability for a business, for service-based businesses, starts from pricing. What you sell times how many times you sell it equals your revenue, and whatever money's left over from your pricing equals your what's called your gross margin, money left over to pay your overhead essentially.
Mhm.
And yeah, so it just like I got deeper and deeper into the tools for what's called financial planning and analysis. Like in an accounting way, that's what it's called. But it's really about having a budget, watching your margins, watching your cash flow, and setting up good financial rhythms, like having a monthly budget meeting. But you can't do that until your books are caught up and you have what I call the financial roadmap. It's basically management reporting. It's like your budgeting and forecasting, sales forecasting, operating budget, cash flow forecast, that then you start looking at monthly for budget versus actual. What did we think was going to happen versus what actually happened? And then what do we think is going to happen in the future? And then it just happens month after month after month. Like That's also something I learned. I'm like, oh yeah, financials stuff never ends. Like as long as you're in business, you got to watch the finances. So it's like monthly budget meetings will go on forever ad infinitum.
Yeah.
Yeah.
Yes. Oh my goodness. So much good stuff there. And yes, I mean that the budgeting and the finances and it's ongoing. And I really seen too, I keep, I have a dashboard where I have my month by month revenue from when I first got my coaching business online. So I think it starts as early as 2016. And then I have like a little graph analysis so that I can see, okay, if my income is here and here, like let's say that I hit like a slump or whatever, I know that historically that only lasts for a certain amount of time. And then then I'm back up again. And then I can use that to say, okay, what caused that? Why did it go down? What happened? Because it's usually something, probably around my sales activity or my marketing or whatever, where my focus is. And so we can really use that. And so I would love to know, like, with this spreadsheet, and is it a spreadsheet that you said, or is the system
Yeah.
that you use?
Yeah. It's called I call it the financial roadmap,
Okay.
aka again, management reporting. But yeah, it's essentially just a really fancy spreadsheet file.
Yeah, and so do you kind of look at trends? I'm sure you do, like past trends, and do like what I was just talking about, like let's see how we can, let's see how we can improve this. Let's see how we can, do you look at ways that we can increase our cash flow, increase revenue, and put strategies in place to do so?
Yeah, absolutely. So it's kind of like it there's different versions, right? Like there's good, better, best scenarios and also
Mhm.
worst case scenarios, like speaking of recession or economic downturn, right? Like
Yeah.
um we can, so in normal times, in kind of like stable times, yes, absolutely, we want to constantly be looking backwards so that we can make educated guesses about what's going to happen in the future. So for most, say, professional services businesses or agencies or firms, right, which is most of the people that I work with, marketing agencies, interior designers, comms, PR, like that kind of stuff, it's professional services. So typically things slow down in the summer, they slow down in December, and
Mhm.
between like end of January to like June is super busy. And then between end of September to like mid-November is super busy, right? And
Mhm.
that was pretty reliable to look at. When there's an economic downturn or even an exponential amount of growth, there's no patterns to
Mhm.
forecast on. So we can look backwards as much as possible, but it's not the same as what is potentially coming in the future. And so the way that you forecast changes. So in normal times, we forecast and go, great, this is what we anticipate will come in for, the busy times. And here's what we'll anticipate we'll have a slow summer.
Mhm.
And so we can plan that way to make sure we have enough cash in the bank if we have 8 employees and need to make sure we can cover payroll in August when, things are really slow. Um, so so yeah, it helps inform that. And then like you were talking about, we also then can put some numbers for people, awesome people like you who are working on sales and going like, well,
Mhm.
here's what we want to target in
Mhm.
terms of sales. So you can do your calculations to work backwards and go, okay, well, here's how many phone calls we need to get in and what are the conversion rates and
Mhm.
what are we gonna how are we gonna make sure we get to this 100,000 a month or $200,000 a month or whatever it is.
Mhm.
How many calls do we need to be doing, right? So it's like we give the foundational numbers for sales consultants and for marketing consultants to then have their goals for leads and impressions and all those types of things, right? And then as well, it also gives us, from a growing business perspective, when you're going from 6 to 7 figures and then multi 7 figures, like the financial planning and analysis doesn't change too much for service based businesses. It's not like most of them are going to go for investment, like they might go for a bank loan, but most of the time, those are the types of businesses that are funding themselves through their profits, right?
Mhm.
And it's more so than having other systems come in, like sales systems and marketing systems and operation systems and HR. And so when we want to be able to plan for those kind of more overhead expenses versus in the early days, like under $1 million, businesses that are going from like low 6 figures to 1 million, most of their investment in people and stuff is going to be creatives or the people who are actually doing the client work so that the owner can get out of only doing client work as long as that's what they want to do.
Mhm.
Some owners want to do the client work. And so then we'll go the other route of like getting it to the point where we can hire a general manager or something. But it's more so investing that way, which the first thing we have to do is look at, like I said, pricing and project pricing and making sure that there's good margins that allow for hiring those people and money to have overhead that will eventually create the budget to hire sales, marketing, operations, all that kind of stuff, right? So when you actually look at the financial roadmap is the whole business model in numbers in a spreadsheet file effectively.
Mhm.
And so it allows us, like I said, to do those good, better, best scenarios of like, okay, sure, we're at 780,000 in revenue right now, and next year we want to get to, maybe we want to be aggressive and get to 3 million next year. Like for a service firm, that is fairly aggressive to grow that much.
Mhm.
So it's like we can work backwards and go, well, how are we going to get there? Like, what does our pricing need to look like? How many projects is that? What team do we need to fulfill that from a capacity perspective? And all of that has budget implications. And so we can do that and go like, is this reasonable? Do we need to go get backup cash? Do we need to get a loan? Like, is this something there's grants for? And then, so that's like future state planning. And there's also kind of like the day to day. So all of this financial roadmap stuff can be used for everything from month to month management of money and budget to then what's happening in the next 24, 36, 5 years, months to 5 years for where we want to go.
Mhm.
So that's why I call it the financial roadmap, because it's kind of like the near term stuff that we
Mhm.
need to be keeping an eye on and tweaking in order to be able to get us to a goal. And in coaching, right, like one of the things from a financial perspective I always ask is like, what's the big vision?
Mhm.
And most people who have done some amount of coaching or business advising or thinking of where they want to take their business after the first 6 figures kind of go, I want to get to 1 million. And then after that, it's like, well, now what, right? What do you want to do in the next 3 to 5 years? So I like to know that too, because it shows us what kind of business we're building. And then
Mhm.
we can budget and forecast for that. Anyway, that's a bit of a tangent. Did I answer
Yeah,
the question?
yeah, you did. And how long does it take you to build the financial roadmap? It seems pretty robust and in depth.
Yeah, it usually takes between like 10 to 20 hours, depending on how
Okay.
complex the business is. So that's building the tool, right? So
Mhm.
just like for your business, I'm sure you have some sort of like sales audit you do and you
Mhm.
like see what kind of processes and systems and things they're doing already. That's effectively what the financial roadmap does is like, I go, okay, great. I need a pricing do you have a pricing calculator? If so, I want to
Mhm.
see it. I want to see a client contract. I want to see what your payment terms are. I want to see what your subcontractor agreements look like and the payment terms there. I want to see what reporting is coming out of your accounting system or project management system, out of your CRM, so we can
Mhm.
pull in sales forecasting. Like anything that touches the money, I need to see. So because it tells me about what the business model is built on
Mhm.
and how we can make assumptions about the flow of money
Mhm.
and money in and money out, right?
Mhm.
So once I have all that information, I go through and build out, and it's basically, the whole tool is meant to monitor profit and cash flow at the end of
Mhm.
the day. Like those are the two major things, right? From a KPI
Mhm.
perspective. Um, but of course, yeah, there's all sorts of inputs from marketing efforts to what the people, the people on the team. So we have a people budget that gets created. And yeah, it just translates everything into numbers. So if a business is on the lower 6 figure end, they probably don't have very many people, or they might just have subcontractors and they don't
Mhm.
have complex budgets yet. So it could be, 6 hours even to build it.
Mhm.
And then to businesses that, I've been speaking with a few right now that are around the $1.5 million mark, and they're, looking at their financial statements from the accounting system, which if people are familiar with what's called an income statement and a profit and loss, those
Mhm.
are the same thing.
Yeah.
Income statement is what accountants call it. Profit and loss is what QuickBooks Online calls it. And then the cash flow statement. So they're sometimes looking at those if they're
Mhm.
fairly on top of their numbers, but those are only looking backwards. Like those are
Yeah.
only looking backwards. And so always what's missing is the forward facing, so like the 3 to 12 month kind of rolling forecast to help
Mhm.
them make decisions and investment decisions and pricing decisions and all these things for being able to control what's happening with the money and the profit in the business in the coming 3 to 12 months. So
Mhm.
yeah, it can be quite complex. It can be not complex. Right now, because I'm doing a lot of like downturn planning.
Mhm.
Um, I've been keeping it fairly tight for people to start with cash flow forecasting, because that's kind of the biggest way
Mhm.
that pain comes up, is when there's no cash in the bank or very
Mhm.
little cash, and people, kind of going like, how is this happening when I'm invoicing $120,000 a month, but I have 10 grand in the bank every month? Like,
Mhm.
where is that money going?
Yeah.
So I can pretty quickly come in and, if we're doing that and evaluating all the information that they're sending me, kind of point to where the problem is. And often it's a pricing problem. They don't have enough margin or markup on their costs. It could be a payment terms problem. So they're not accepting payment up front, or
Mhm.
yeah, it can be a whole host of things that point to cash flow problems. But having this, having all of this lens in place from the roadmap, I can very quickly go like, oh, this is a pricing problem. Oh, this is a accounts receivable collections problem, or
Mhm.
whatever it is.
Yeah, it helps you to kind of get that diagnosis, and then and then you can hone in and say, okay, this is what we're going to address, and
Yeah,
we're going to make
exactly.
corrections.
Yeah, and so once that tool is built, just like, if you do an audit and a plan and a strategy, then it's like, okay, well, now what do we do with this?
Mhm.
We've built it, but like, you just like a business plan, you press save and it's obsolete. Same with
Mhm.
numbers. Like, we could look at the bank account, there's 10 grand right now, and 5 minutes later there could be 100 grand because you get a big deposit. So just like I was mentioning earlier, it's like we have to build the tool, which is the base that we then use to monitor budget versus actuals. And so that's where once we've built the financial roadmap, and kind of go like, great, here's what our plan is for the next 3 months based on what we see,
Mhm.
is happening from recent historicals. Now we got to monitor this. And so
Mhm.
depending on the size of the business, at minimum, a monthly budget meeting so that we can look at the previous month and then continue forecasting 3 months forward. And then if it's more complex and there's a lot more investment, like if a company is actively investing profit to grow, like from 780 to 3 million, we might need to be looking at cash flow weekly, because
Mhm.
there's a lot more spending happening to build and invest versus just regular spending for the amount of business that they have.
Mhm. Mhm. So, a couple times you've mentioned downturn economy and things like that, and I brought it up at the beginning of the show. And so, like, what are some of the ways that you recommend businesses navigate financial challenges and make informed decisions during uncertain times?
Yeah, so it's kind of like, I've been likening it, however bad this is, to the medical system, where it's like we have acute care and preventative care.
Uh-huh.
And so when there's a downturn, we have to turn to acute care
Uh-huh.
effectively. And so if people don't have forecasting or budgets in place, like, it's even harder to get to the point where we understand what's going on, because
Mhm.
there's no reliable bookkeeping or reports, or,
Mhm.
there's no budget or model to go like, well, what was normal profitability or cash flow? So if they don't have that in place, it's still, the first thing is like, we got to build a tool to be able to understand what's going on with the numbers. But I'm more so focused on cash flow versus like everything from first pricing to sales forecasting, to understand
Mhm.
what their booked contracts are, to operating budget, people budget, and then cash flow. So that's like what's everything in it. But so when times are tough, forecasting goes out the window. There's no patterns.
Mhm.
We can't just go finger in the wind, here's what we think is going to happen,
Mhm.
because there are no, and this happened during the pandemic as well. Like,
Mhm.
some businesses skyrocketed, some went tanked, and some kind of like stayed somewhere in between.
Yeah.
And again, there were no patterns. So we just had to go with like, how much cash do we have right now? What's our backup reserves? What are we spending? Is everybody and everything driving to revenue right now? If it's not, it may need to be cut.
Mhm.
And subscriptions is a big one,
Mhm.
especially as you get bigger and if you have a fully remote company. So those should be constantly on top of, but even more so when things are down. And then usually from an operational kind of finance perspective, the first thing you want to do before you even consider cutting expenses is, how do you increase revenue?
Mhm.
Now, that can be a challenge when there are no patterns, because what you've done before, like for example, with e-commerce businesses right now, one, there's a downturn. Two, Meta and the big advertisers are
Mhm.
having to comply with government changes. And so
Mhm.
the way that a lot of e-commerce companies have advertised and gotten revenue before is completely changed.
Yeah.
And if that was their only form of getting revenue, it's like those companies are hurting right now.
Yep.
So part of like, if it's in general ongoing day-to-day stuff versus when we're in a downturn, as a business grows, we need to start mitigating financial risk and business risk more, which means diversifying sales channels, diversifying marketing channels, diversifying our, capacity and, how we fulfill things. In downturn, if we haven't already, it's kind of like, how quickly can we see what is working and what is not and switch and pivot? So kind of when there's any type of shift, whether it's downturn or like massive upturn, a business kind of gets thrown back into startup mode where
Mhm.
it's just like you constantly got to pay attention. The word pivot comes up all the time. Like people's, like for example, I used to have an education side of my business that I recently shut
Mhm.
down. And I realized that it was geared towards freelancers. And I realized freelancers don't want to pay for anything. So I shut that down and I've had to pivot with it. And it's still here, but it's more in the background, B2B kind of education that can be leveraged with grants and all sorts of stuff. But it's like, it's exhausting to
Mhm.
pivot all the time. And when you've had a business for a while that's worked well, and then all of a sudden a downturn comes or something changes and you get thrown back into that, you're reminded of like, oh yeah, business isn't just like set it and forget it. Like you get lulled into complacency and then the economic conditions change. And so in a preventative sense, if we've already gotten the financial roadmap in place, for many of the clients I work with, we've been forecasting downturns for many, many, many months and been able to put changes in place to start targeting new sales channels, try different marketing, see what's worked, really evaluated expenses, so that it hasn't come to this stage where there's panic
Mhm.
and just going like all of a sudden the money's dried up and
Mhm.
starting at that point from a financial planning
Mhm.
perspective.
Yeah, those are all wonderful things to think about. And yes, I mean, I think from the budgeting and the cash flow and just really looking at revenue generation. When I work with clients, we come in and we can take two different avenues. Like we can start at the audit phase and do all of the auditing, but if they need a cash injection, I have a 5-week sales boost where we can come in and do a retargeting and just look at, okay, what are all the leads who that we had sales conversations with, who can we retarget, re-engage, and get them back into the pipeline, and convert some sales based on conversations we've had or partners or whatever. So there's a number of things that we can do to bring in some income, and that works. And so I always like to look at where are you leaving money on the table right now, also looking at where they're losing sales because they could be having sales conversations and they're not converting. So it's so good to have like the kind of the tactical, like here's the story that the numbers are telling us, or here's this, the picture that they're painting, and then here are the specific tactical things that we can do. And specifically in this economy, I completely agree. I mean, I saw businesses that, they exploded during COVID, exploded in a good way, and
Mm-hmm.
started to, they started to invest and put all their money in that at that level, expanded their sales team, all of that stuff. And then as that shift started to happen, it didn't match up, the staffing versus the number of conversions. And they, some of them that just continue to try and live at that level are really hurting now. And I've seen that too with the Facebook ads, what you're talking about, the Meta and the data privacy. So it's definitely an interesting time that we're living in. And even when we come out of the downturn and the economy regulates, like we're still going to have a number of things to be navigating with how people buy and purchase and technology innovations. And so it's a time to be like, if you're an entrepreneur and you're a business owner, like, going into complacency isn't,
Yeah.
you didn't choose the right career path.
No, exactly. And it was interesting, like so in the last recession, 2008, right? Like I was 20, whatever, 25, 22. I don't know how old I was. Early 20s, had no clue about how economics and whatever worked,
Uh-huh.
right? So I was just like, whatever. I didn't pay much attention to it, right? And so I looked up like how long did it take really for the economy to recover from that? And how long was the actual recession? And so don't quote me on this, like someone else go look it up because I can't
Mhm.
remember like where I looked it
Yeah.
up, but it said like the definition of recession is something like 2 to 3 consecutive quarters of reported
Uh-huh.
downturn from whoever. Government reporting? Don't know,
Yeah.
can't remember. But it's like some long amount of time, and it's after the fact. So like we like people are saying, well, we're not in recession yet, but it's like, yeah, we're having economic downturn. So we're not officially going to know if it's recession for 3 to 6 to 9 months potentially. And so,
Mhm.
but then it's like, well, what do you do in the meantime? Right.
Yeah.
So that's as we're talking about all these things. And the other thing it said too was, I think it was, and again, don't quote me on this,
Mhm.
but I think it was like, yeah, the last time it ran, lasted, I think, for 2 consecutive quarters, but it took like 3 to 4 years for the economy to get back to where it was when
Mhm.
recession started. So, and to me, it's like recession doesn't mean people don't have money to spend. It's that they're
Mhm.
not spending as freely as they
Mhm.
were, especially for, fun things. So
Mhm.
B2B side may be somewhat less affected unless it's kind of like something that is not, the business doesn't absolutely need it to run, like
Mhm.
quote unquote bread and butter stuff, right?
Mhm.
So from a, surviving an economic downturn perspective, what I've been saying to people is right now you have to look at what is your bread and butter type work? What is the
Mhm.
work that people must spend on regardless of what's going on in the economy? So,
Mhm.
for example, I work with a lot of interior designers, right? So, right now, people, because of interest rates, at least here in Canada, I don't know what's going on in the US, but like interest rates are ridiculous. So, people aren't like, whereas in the pandemic, residential design skyrocketed because everyone was at home.
Mhm.
Now it's a bit, things are a bit tenuous because of interest rates and people don't want to invest more money that they may not have had in the first place or were, want to just save now, in their residential stuff. So the bread and butter work might be actually like refurbishment of like office moves or
Mhm.
renovation of, rental buildings that people leave and then the rental building, so it's like not
Mhm.
glamorous work, but it's still work. So we got to get, like, depending on what industry people are in, you got to get real clear about what the bread and butter work is that you can
Yep.
do, to be able to stay afloat.
Yeah, and go where there's opportunity,
Yeah.
go and find, find where people are buying and spending, and maybe you need to, during the pandemic it was pivot, pivot, pivot. Like maybe you do need to pivot a little bit, or
Oh
keep
yeah.
focusing on your target market and put your feelers out in other areas. I've been doing that myself, exploring different revenue streams that I can open up and different things that I can do. And I think that's where the downturns, the peaks and the valleys per se, like those valleys shape us. Like it's not here to like for us to be victimized and oh no, it's I just can't wait for the economy to be, you'll just wish your life away. This is like the people that really step up and they use it as an opportunity to grow and to become better and show up better and serve better. At the end of the day, like they're appreciative of what happened. Whereas people that kind of fall into the victim trap, um, grow stagnant. And again, like if you're a business owner and that's where you are, you might want to look at your career. So
Yeah. Yeah. Being an entrepreneur is not for the faint of heart.
no,
And the longer I've been an entrepreneur, like it doesn't get any easier, but you recognize the ups and downs more,
yes,
not simply, but like you can recognize them and accept them a bit quicker, even though they're still uncomfortable.
yeah,
But yeah, then you can get yourself out of wallow mode and go, okay, what do I need to do? Like for me with my business and shutting down
yeah,
my education side, like I said to myself, I'm going to invest only X amount of money in trying to make this go. And once I reach that, it's done. And so that
mhm,
happened. And it was like, okay, it's done. Like
yeah,
I set that guardrail for myself. I actually followed it this time because in my early
mhm,
entrepreneurship days, I was like, whatever, I got credit cards, like
yeah.
I made all the money mistakes, right? So this time I did that and it felt so good to just have that guardrail and just be like, okay, time to move on. And now it's like I'm in a pivot too of going, okay, solely now externally focusing on my fractional CFO services and supporting
Mhm.
people that way. And even for me in this downturn, like, my financial roadmap, like kind of starter package, used to be 3 to 5K, and we would do it over like 3 to 4 months.
Mhm.
And so in the last month, same, I've been going like, oh, people are, kind of hesitant to spend that much, at least for my target market, right?
Mhm.
And so I've now split it to, like you said, your 5 week thing. I've
Mhm.
got similar, like a 2 to 3 week little project that's like $1,500. We dive into the cash flow, for example, like
Mhm.
the most painful part to understand what's going on. And then, we can kind of grow from there.
Mhm.
Yeah.
Yes.
Yeah.
Yep. Yep. That's yep.
Constantly experimenting.
Oh,
Business is just
always,
a big game
always.
experiment.
Exactly, exactly. Well, this was an enlightening conversation, Jacinthe. Thank you so much for your expertise. And I hope our listeners and viewers were taking lots of notes because we covered a lot of territory and you've definitely got some things to think about around financial roadmaps and how, those cash flow statements, profit and loss are looking at the past, and having a system for looking at the future can, really be a game changer, and understanding the lack of predictability as well. I think that is important for people to recognize.
Yeah, totally.
Yeah. So thanks everybody for tuning in to More Influence and Impact, and we'll see